Hi there, Vinnie from Project Frugal. Today we're going to be looking at why the stock market is collapsing and why I'm panicking. Oh, you got to check this one out. After Boxing Day, things started to look a bit shaky in the stock market. Prices went down quite a substantial amount, and they've continued to go down for the last month, basically. We're going to find out why they've gone down. We're going to look at some tactics that you can use so you don't panic, because the last thing you want to do is panic and sell your stocks. And I'm going to show you some reasons why you shouldn't be selling your stocks. Often you'll hear of people jumping off buildings because they've lost a fortune in the stock market, but what goes down usually comes back up, and what goes up usually goes back down. So there's nothing really to worry about. Panic and fear is a typical emotion when things start going south. So you've just got to get on top of that panic and ride it out, because even though you think everything's crumbling and I'm going to lose a fortune, chances are you're going to be fine and you're not going to lose a fortune. If you've invested in stocks and the price starts going down, it's only natural that you'll start to panic and you'll start to think, well, maybe I should have sold. Maybe I should have sold maybe 2 weeks ago at the peak of the market. But the truth is, no one really knows what the market's going to do. Yes, there are obvious signs, like if there's a big earthquake, for example, maybe the market's going to tumble, depending on the area where you live, or maybe a tsunami, or other natural disasters, or wars, or anything like that. Yes, the market can tumble. But also, if someone comes up with a great invention, or some new gadget or gizmo, chances are the market's just going to skyrocket, especially for that particular stock, whatever that industry might be. So it's only natural to panic and get fearful of when things start going downhill. And that's perfectly normal. There's nothing to worry about. What you got to do is you got to stay in for the long haul, ride over that fear, and just, suck it up, basically. If you can get over the emotional hurdle of, I'm going to lose everything, my life is ruined, I've been working to save all this money up and it's all gone in a matter of weeks, then you'll be fine. And what you got to do after that point is you've just got to keep investing on a regular basis, called dollar cost averaging. You just keep on buying on a regular basis. You buy it whatever the market is. You don't worry if the market's going up. You don't worry if the market's going down, because overall you'll make money. And I give you a 2% promise on that. That's about the best I can do. So chances are you're going to be fine. History has shown us that the stock market typically goes up from 8 to 10% a year on average. This is before inflation and tax. So, hey, take that out and you're left with, a couple of peanuts. But, hey, you got to make money somehow, right? As long as you're investing for the long haul and you don't panic and you don't take your money out, you're going to be fine and you're going to actually make money. And then that money's going to compound and you're going to make more money. And before you know it, Elon Musk, look out. What we're looking at here is the Smart Shares New Zealand Top 50 Exchange Traded Fund, or ETF, and we can see through time, we're setting this up for maximum visibility here. This is going back, how far is this going back? Let's just drag it out, see if we can drag it out. Okay, looks like it started in 2008, that around the time of the global financial crisis. That's not ideal because it plummeted at that point, but you can see that dip here, and then the market slowly recovered. Didn't get back to where it was supposed to get to for literally 2014, 2008, maybe 5.5 years before it actually got back to where it was. But if you'd sold it right down here at the bottom of the market, yes, you would have lost money. If you'd bought it right here when it started and you just held on to it for 5.5 years, you would have made precisely nothing. But that's okay, because you would have been earning a little bit of dividends off however much this thing pays. I've got no idea how much it pays. Probably, I don't know, maybe 3 or 4%, something like that. That would be realistic. You can see there's been other dips in here, so you can see it going up and down, up and down, up and down. Over here, if we go down to roughly around here, there was an earthquake in Kaikoura in New Zealand, and it dropped there. So around this time here, earthquake, bad. If we just carry on going up here, now you can see when COVID struck, end of 2019, you can see when we get up to the top here, this is where the market was at, all-time high, generally speaking, for this. This ETF pretty much follows the New Zealand market anyway, so we're going to go off that. It's the top 50 companies in New Zealand in an ETF, Exchange Traded Fund. And COVID struck, everything panicked around the world. This just plummeted, and it recovered over the next few months. In fact, it didn't even take long. So what are we looking at here? We're looking February-ish, and by another 8 months later, it was back to where it was, and then it carried on going up. And of course, now that fiscal policy, inflation, hikes in interest rates, that spooked the market, and shares are now less attractive, apparently, to investors. I'm still going to be investing in shares. I don't have a problem with that. But as you can see, we've plummeted. And how much have we lost? Well, we've lost a little bit there. But that's okay, because if we look back over time, we're still up at this point here than we were over at this point here. So nothing to worry about. So eventually, this is going to go back up, and we'll be fine. Now, if we go and have a look at a particular company that I bought, this is on my portfolio. This is not on Denise's portfolio, but I personally bought $1,000 worth of this particular stock in New Zealand. It's called Allied Farmers. Allied Farmers, with its subsidiaries, sells and purchases livestock in New Zealand. Does some stuff around livestock, rural stuff, sale of calves, etc., etc. So if beef prices go up, well, they make an exceptional profit. Generally speaking, this stock is going to go up in price. If they have a bad year, if it rains a lot, or maybe there's not enough calves being born or something like that, generally speaking, this stock will go down. However, if we have a look at this, I purchased $1,000 worth. Here we go, $1,000 back on the 4th of December 2020. So what are we looking at here? We're looking at, I've roughly held this for a couple of years, roughly. Well, hang on, it's less than that. Just over a year anyway. And that was because I knew it was paying dividends in January. And just before I bought it, I lost money. And basically the stock price, I'd bought it, the stock price started going down, and it got down to $750. So essentially I'd lost 25% of my money, and I thought about selling it. And I really thought about selling it. Is that a good idea? Is it a good idea? I'm not sure. I'm not sure. We'll go and have a look at the stock on Yahoo Finance. We'll pull that up. Here we go here. If we go to Max and we go to Chart, and we go to Max again, hopefully we can see it on this. And we'll just pull this down a little bit. And we'll just change it to 2 years. Right, so here we go. This is a better looking thing. So I bought it in December 2020. So let's just say roughly about here. So it was quite high on the market at that particular point in time. And then as soon as I bought it, it went up a little bit. And then it just started going down and down and down. And then it bottomed out in March last year, so 10 months ago. And then it started slowly creeping up. So obviously they had a good year, or something happened. They produced their financial reports and they were favorable, something like that. And it carried on. And eventually we got past this hump here of the, wherever it was, 6th of January, over here. December, sorry, over here. And I've basically been in the profit since then. And then you can see up here the market has dropped, and it's dropped a bit. So I've lost money on it from the peak, but I haven't lost any money because I haven't sold it, and I'm still up from where we started. If we go over here, just have another look at that. So I've spent $1,000 on it. I've got 1,282 shares. Currently it's worth $1,013.12. And that's not including the dividends that have been paid out, which is a whopping $14. So we're talking about $27. So not a huge amount. I'm up 2.7% roughly in just over a year. That's fine. It hasn't gone down, and I would expect once this current panic situation finishes, then this is going to go back up. So let's go and check out another company. This is my worst performing stock that I currently have in my personal portfolio. We'll check it out, and we'll see what we're going to do with this one. You can see that I've got almost $7,000 worth in this particular stock, this energy company. And I've made 3 purchases here. Well, actually 2 purchases. One on the 2nd of September 2020, and basically 2 purchases on the 18th of August, which was essentially one transaction. And we've put in $7,815.68 into this company, and it is currently worth $6,957. So we have lost lots. Even though this says $289, ignore that because this has actually paid out dividends. So we're down on this particular company quite a bit. And you can see over the last year, it's just gone down and down and down and down and down. And that could have been because of financial decisions that they've made, or maybe there's more competition in the energy market. So what am I going to do with this? Am I going to sell it at a loss? No. I'm going to hold on to it. I'm going to stay the course. I'm going to be patient. I know it will be paying out dividends. It's a profitable company. It's a well-known company in New Zealand, and it will do well. And I've just got to stick at it, hold it. Probably won't be buying some more in the short term, or even in the medium term. I'm just going to stick with what I've got, and eventually it'll get back to where it was, and I'll be golden. There you have it. The main thing is not to panic. Keep your head. Relax. Relax. Don't worry what the market's doing. If it's going up or going down, just do not sell all your holdings when you're starting to sweat and when you can feel your fingers tingling. Just stay the course. Over time, it's going to improve. Things will be right. It'll come right. And you'll wonder what all the fuss was about. So I hope you enjoyed this video. Don't forget to like and subscribe. Leave me a comment below. Tell me what you've lost money in or what you're hoping to invest in. That'd be awesome. Okay, we'll see you later. Have a good one. Bye.